Good morning, ladies and gentlemen. In our ongoing coverage of first quarter earnings, we are now joined by the management of Pidilite Industries, maker of the very famous Fevicol brand of adhesives, and Mr. Sudhanshu Vats, the managing director, joins us to discuss what the earnings have been, and they've been stellar. You see the numbers right there in front of you as far as numbers are concerned. Net sales were up 10% to 3,753 crore rupees. You saw an increase in the operating profit margin, a rise in EBITDA, as also a sharp uptick in net profit at about 677 crore rupees, which is 18% higher over last year and 49% higher over the quarter gone by, which is the fourth quarter. A very good morning to you, Mr. Vats, and of course, shareholders have been rewarded by a 1:1 bonus as well. Please tell us, did this growth come because only of higher volumes, or was a price rise also instrumental in this wonderful set of numbers?
Thank you so much, Shailendra. It's always a pleasure to meet and talk to you. I think as far as the quarter gone by, I think our underlying volume growth came in at double digit, very close, 9.9%, and our overall revenue growth came in at 10.6%. So there is that 70 bits of pricing which is there in this. So I think going forward, you will continue to see a little bit of pricing over and above our underlying volume growth. And as you know, Shailendra, we report underlying volume growth, which is different from total volume growth. So underlying volume growth is, simply put, turnover growth at constant price. Whereas total volume growth for the business has been much higher than that, maybe a factor of 2 and above. So that kind of stuff.
Mr. Vats, you were also fortunate to have lower expenses and lower raw material costs. I mean, how better can it get for Pidilite? You have rising volume, rising prices, lower costs, and lower wages. What have you been having for breakfast these days?
No, Shailendra, let me first make this clear. I think we have consistently delivered double-digit underlying volume growth. That is because the way we work, we go deeper into India, we continue to focus on distribution. Aapko pata hai, now our PKDs, Pidilite ki Dunia, is above 8,000 number. But we also work very diligently with our users and applicators. So I think that's our mantra, and that will continue. That delivers underlying double-digit volume growth. Having said that, I think pricing is very, very nominal. So I wouldn't say that we are going to take too much prices. We are basically going to give right value to our customers and consumers. I think as far as profitability is concerned, Shailendra, you're right. It has come in at 25.1% at consolidated level in the quarter gone by, in quarter one. But I would break it up into two. There is some element of seasonality and lower ANSP in this, because we do ANSP depending on what the requirement of the brand and business is in that quarter. So that's not going to sustain as we go forward. But you are absolutely right that input prices have been benign, and our understanding is in the next 3 to 6 months, they should remain benign. So input cost prices, advantages, and some advantage of leverage, scale leverage, as our volumes grow, are built into these numbers. We stay steadfast. As far as profitability is concerned, Shailendra, we will deliver what we have committed year on year, which is our corridor of 20 to 24%. The way the year has begun, we may be on the higher end of that corridor.
Yes. Okay. Mr. Vats, I know you take it with all humility and a lot of finesse, but still, I think it's got to do with the breakfast that you have, that you deliver such good earnings quarter on quarter, year on year. Nevertheless, we'll keep the breakfast recipe as separate and secret. But tell us, any fresh capacity that is coming on stream, any new factories that you are planning to put up in the remaining 3 quarters of this, the remaining 2 quarters of this financial year?
So we, as you are aware, Shailendra, we keep looking at capacity in order to adhere to basically deliver to our growth. As far as capex is concerned, we keep our capex in the range of 3 to 5% of our turnover. I think this year will be similar, no different from that. As far as some of the activities are concerned, which are happening and are going to happen, is basically ROF, where we follow a distributive supply chain model, where basically we put up additional plants. We have already put up 3 more, so it's now 14 plants in Roff. I think some momentum there will continue. So that's important because Roff is delivering very good results, very good volumes. I think we are also going to consolidate and automate some of our plants which deliver and build the legacy brands, some of our very famous brands, like Fevicol and others. So therefore, and construction chemical. So basically, we will consolidate and automate in some areas. We will provide for additional capacity as we go forward in the businesses that are showing robust volume growth.
Okay, Mr. What's going ahead in terms of expanded distribution reach as well as newer geographies? What are you targeting? Fevicol is available everywhere, we all know, but what are the new markets that you're looking for in terms of newer products or newer products reaching existing distributors?
Yeah, so Shailendra, as you know, we continue to drive our distribution. We keep taking it deeper. India is a very large country, so I think, there is always room for expansion, both in depth of distribution and width of distribution. And to your question, and it's a great question, the width of distribution basically we'll continue to drive with basically trying to see if we can add more and more areas as we go forward. I think, so that's the area. As far as range selling into distribution is concerned, which is if we can drive more and more into the same outlet, we continue to build newer products across categories. And some of those products are showing a lot of promise, and there will be distribution and expansion in that. So if I talk about our Fevicol range, the Nail-Free Ultra and Relamp, both of which tackle multi-substrates or convenience of putting up the product. So I think that is doing exceedingly well. We have, our All Seal range which has come in, the Bath Seal Select, and, waterproof, some of those products which are higher end products, better products for the consumer in our waterproofing space. They are showing a lot of promise. They will go for distribution. Some of them will also go into projects when it comes to construction chemical. So you will see that action. And as far as our consumer products is concerned, Shailendra, you continue to see newer products. There are newer variants of Fevikwik, our famous brand. The gel has come in, advanced has come in. Do try it if you've not tried it. It'll be available in more and more outlets. And it's definitely available at quick commerce if you're a person who orders on quick commerce.
Okay, I wanted to understand how much is quick commerce and m-commerce a percentage of overall sales. Is it rising?
It is rising very rapidly, I can share with you. So we are very happy. We are delivering very good growth, really good growth in this segment. Unfortunately, we don't share exact percentages, so I will not be able to share with you the number on what our percentage is. But all I can tell you, it's growing very rapidly. It's growing very, very rapidly. It's a channel which is advantageous to us, and we are using the channel for the right reasons to grow this.
Right, Mr. Vats. We'll close this interview with the monthly and the weekly stock price of Pidilite Industries, ladies and gentlemen. One of those fantastic multi-baggers, if you've had the fortune and to hold it in your portfolio over the last 10 years, each year the stock has appreciated 17% and handsomely beaten the Sensex as also the FMCG index. We look forward to fantastic earnings, Mr. Vats, in the remaining 2 quarters of this financial year. And of course, as we now continue to meet you in subsequent quarters, we'll be discussing what you have for breakfast as well. Thank you for being with us.
Thank you. Thanks so much, Shailendra. And I think it's always a pleasure. And look forward, and thank you for all your good wishes. And all the credit, Shailendra, on a very serious note, goes to everyone at Pidilite. It's a company that is dedicated in doing what is right for our customers, but also our communities.
And absolutely, we've seen that happen over the last 30 years or so since I've tracked the stock. And more than the product, we love your ads, which have such an interesting and subtle blend of humor as well as a great product. Have a good day, Mr. Vats.
Thank you. Thanks, Shailendra. Thank you.
That, ladies and gentlemen, was Mr. Sudhanshu Vats, MD at Pidilite, where underlying volume growth as well as price rises coupled with a low cost of raw materials has produced a stunning set of first quarter numbers. Not only that, but a 1:1 bonus for long-term shareholders. Thank you for watching.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.